Well, the party continued on Wall Street as the S&P 500 and the NASDAQ Composite hit all-time closing highs here today. We didn't quite get to an intraday high, but nonetheless, we've completely evaporated all that ugliness in late 2018. Today's trading was led higher by stocks like Twitter, Hasbro, Kohl's, all doing quite well off of their earnings announcements. We have a number of stocks still reporting earnings after the bell tonight, so perhaps we'll look at those. And then I wanted to take a look at a trade setup that will actually go on the opposite side of the coin, taking a look at a rare bearish trade in this otherwise robust market environment. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 23rd, 2019. First of all, if you're new, welcome aboard. Remember to go to our YouTube channel, click subscribe. While you're over there, go to our description and sign up for our email distribution list. In addition to that, we would encourage you to follow us on Twitter. My handle is @BrandonVanZ. And anytime you see these posts regarding the Market Outlook video, we would encourage you to click like and retweet if you get value out of them. And then lastly, we have a presence on Facebook as well. We would encourage you to follow us over there. You can just go to that web address embedded in the logo in front of you to check out our group. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us for those of you that are premium market scholars that are following along at home with the charting package that we set you up with. As you can see right here, the S&P 500 did close at basically the highs of its session, very, very close. We were up there around those levels, and you can see here that this chart is a 3-month chart. So if I were to right click on it and then go to, let's go to maximize sell down here, and that way you guys can see it in a little bit better detail. You'll notice that we just barely missed out on having an overbought cluster signal. Haven't had one of those this entire run, you'll see here. Remember, when we do have those, we would have a little red dot show up on the chart up here and another red dot showing up down below where the market forecast is. And that overbought cluster signal would occur if we had the green, the red, and the blue line up above 80 all on the same day. You can see that the blue line just barely missed out of that. The blue line did close at 77.82, so very, very close at that particular juncture. There are probably some other stocks out there. In fact, that's one of the things that you receive when you sign up for our email distribution list. Not only do we give you a heads up of the link to the video each day, but within those emails, if you scroll down to the bottom, we'll show you all the stocks that are giving you overbought and oversold cluster signals within the S&P 500 as well. So narrowly avoided an overbought cluster signal there, but it does go to show you how strong price action has been here recently. Well, this is a 3-month chart. I do want to kind of scan this out a little bit further in time. Let's go to a 6-month chart and let's see if that takes us back to where we want. Not quite. You can see that we're at 6-month highs very easily here as well, because most of those highs that occurred were early in October last year. 6 months ago was actually end of October. So let's do this. Let's go back on a 1-year chart at this point then, 1-year daily. And you can kind of see what we've been dealing with here along the way. The high that we put in on an intraday basis was back here on September 21st, 2018. The intraday high was 2,940. So we're about 7 points away from hitting an intraday high. However, you'll notice that the candle directly to the left of it, in fact, let me do this. I'll kind of zoom in here, and that way we can kind of see this a little bit better. This candle all the way off here to the left, this would have been on September 20th, that would have actually been your all-time closing high. And that particular candle, if you look up here where it says H colon, when I point at that candle, it does say 2,930. And so with us closing at 2,933 today, we were 3 points approximately above the prior all-time closing high. So at this point, I would assume that the intraday high will be not too far away, and we'll likely be celebrating all-time highs in the stock market, no matter how you slice it, whether it's intraday or closing price here very, very soon. But this does go to show you, just this image in front of you, how far we've come and how attitudes have really changed quite a bit as well. Remember how folks got really kind of discouraged at the end of 2018 as the stock market was kind of giving us some of these nasty price action to the downside, where it was so bad we received several of those oversold cluster signals in a row. In fact, I remember David and I doing the presentations around that time period saying that, we hadn't seen that many clusters day after day after day for quite a long time. It was extreme price movement to the downside. That was just the market's way of trying to find a bottom, trying to carve out a bottom. The assumption was not that we were going to have a V-shaped bottom, but that's why they play the game. You don't see it very often where the reaction to the upside is equally as aggressive as the action to the downside, but that's how this one shook out along the way. And so, here we are about 7 months later, approximately where we were at that time before then. And now hopefully the market is, beyond that emotional state that it was in late 2018, and now is being driven more by things like earnings. I mentioned some of those stocks that really took off today due to their earnings, Twitter among them. You'll notice here that Twitter was up about 15% here today, cleared above a lot of those prior resistance areas. In fact, you'll notice Twitter had a really nasty gap down on one of their earnings announcements last summer. This would have been July of last year. And the high point of that candle, of that gap down day, was 37.47. So we actually closed $2 higher than that today. And a lot of times when you see us kind of breach that zone right there, the assumption is that that gap will fill. So we might very well be able to see Twitter get all the way up to 42 or thereabouts before we have significant resistance. But that was really impressive to see, and it did help the XLC in general today. Remember, XLC is the communications sector for the S&P 500, and you can see that it went up fairly nicely today, up 1.3%. That one did close with an overbought cluster signal, so we'll have to keep our eye on that. But Twitter was one of the big movers. Hasbro was another big winner. You can see Hasbro bounced all the way up to close to $100 per share, taking it all the way back to where it was late last year as well. And then Kohl's was another big mover here today. Kohl's was up about 12%, and it did get above this prior high that it set in April, but really only got us back to where we were again late last year. So from that perspective, there's still a little bit of room to the upside before those types of stocks are hitting new all-time highs like the stock market, but they are doing their best to play a little bit of catch up there. Let's go ahead and take a look, since we're on the conversation of earnings. I wanted to kind of point out the fact that we had some other stocks that were reporting after the bell tonight. Snap was one of them. So Snap Inc., ticker symbol Snap, one of the more recent IPOs here in the last couple of years. Of course, a social media company that has largely stumbled in its life as a publicly traded company, but recently has actually been performing quite well. You will see that as it stands right now, Snap shares are trading higher after hours. It did close the session at $11.99. Now that was already up 4% in today's session, probably based upon some of that price action from Twitter with the social media stocks doing a little bit better today. But you will notice that the bid and the ask after hours now is above 12. Right now it's about $12.25. So in other words, since Snap reported its earnings, it's gone up even further after hours. And again, to give you a sense of what it's been doing on the chart, let me go back to a 3-month chart here real quick and then type in SNAP. And you'll see that this thing has quietly become a real nice chart, a real nice workhorse of this market over the last 3 months. Again, if you go back further in time, the chart doesn't look quite as appealing, but certainly over the last 3 months, this thing has gone from $6 or thereabouts 3 months ago up here to $12. So in other words, it's doubled in just 3 months worth of time. And if this trend continues, which you can see just today, even before it announced its earnings, it went back to a bullish posture as it bounced off of that rising 30-day moving average. You can see that green background color right there, signifying that we went back to a bullish posture using the market forecast intermediate line. Well, tomorrow, if this thing opens up, you're going to be pushing the possibility of hitting another high up here. As long as it can get above 1263, that trend of higher highs and higher lows will remain intact. So, no matter what you feel about the company in general and, its use as a social media company, the chart itself looks pretty promising. So keep Snap on your radar. Other companies that reported after the bell tonight, Texas Instruments, of course, one of the biggest semiconductor companies out there. Appears like we have a position on that in this particular account, about 220 shares that we've done very well on over time, up about 15 grand. So that's been one that we've looked at a number of times in the past in my various dividend classes. So it might not have the notoriety of maybe a Procter & Gamble or a Coca-Cola in terms of the dividend, but it does have more than 10 years in a row of dividend increases, and every so often you'll be able to catch it with a 3% yield. You can see right now that the stock is trading a little bit lower after hours. It did close the session at 116 or thereabouts and is currently trading at about 114. It was actually higher earlier, so it's given up some of those gains in the after hours session. So it'll be interesting to see how that one shakes out. But again, technology has been doing quite well. If we were to look at Texas Instruments here on the chart, again, a very steady eddy producer there in the technology space in terms of Texas Instruments. So I would anticipate that uptrend has a better chance than not of continuing. And then let's look at maybe one more of the after hours reporters here this afternoon, and that's eBay. This one really came out guns a-blazing. You can see that eBay closed at $36.67 and is currently priced above $38 after hours. So, up at least $1.50 or thereabouts. And so if we were to look at eBay on the chart, see kind of where that would bring us. This chart doesn't look quite as strong prior to this session as we saw with Snap and Texas Instruments, but nonetheless, if we were able to get up there to 38, that's right up at this level, would have made eBay kind of an interesting swing trading candidate. As you can see, it's been kind of stuck in that rectangle box there for the last, let's call it 3 months or thereabouts, 2.5 months. And so tomorrow will be an important day. If it holds that level right around 38, notice that that's exactly where resistance was right here and where resistance was back here. So those of you that might be bullish on eBay, you're hoping for a little bit more of an oomph once the normal session opens up tomorrow. So that kind of gives you a little bit of a rundown on some of those earnings announcements recently and how their charts are shaping up. Of course, we continue that journey with lots and lots of earnings here in the next couple of weeks. But let's get back on over to the normal chart setup here and tighten that up here. Wanted to also point out that not only did the S&P 500 hit an all-time closing high, but so did the NASDAQ composite. Notice the NASDAQ was up about 1.3% here today. We also had big moves out of the Dow Jones and the Russell 2000. However, those two, we weren't able to quite get to new record highs quite yet. It was impressive to note, nonetheless, that Russell 2000 had a very aggressive day here today. It was up 1.6%, so that would have made it the by far and away the biggest performer of these four indices in the United States. Equally as impressive is the fact that it bounced off of that rising moving average yesterday to push us back to a bullish posture right now. Now again, this chart looks different. Notice how we are not hitting even 3-month highs at this point because we're still dealing with this high back here on February 25th, whereas these other three charts are all giving us at least 3-month highs as of today. So, from that perspective, the Russell 2000 still playing a little bit of catch up there, but that is a good sign. It gives us a sense that there is a risk-on mentality out in the marketplace right now. Let's take a look at our next chart setup, which will be chart 4C, just to kind of get a sense of what's going on with 3 green arrows. We do have a couple of things to report here today as far as changes go. We do have 2 new sets of 3 green arrows, the S&P 500 and the NASDAQ. With today's big surge higher, you can see both of those indices produced a green arrow on the MACD. So right there for the S&P 500 and right down there for the NASDAQ composite. And remember, the MACD histogram is a way for us to get a sense of what's happening with price momentum, and if there was anything that was lacking in the prior week up until today, it was that price was kind of meandering more sideways than kind of having a surge higher. Today's nice price action gives us that sensation that we're still in a fairly decent trend trading environment now that we see the S&P 500 go back to 3 green arrows, at least on a daily candle chart like we see there. Remember that the Dow Jones already had 3 green arrows, so it maintained its 3 green arrows over the last week or so not a change there. And then the Russell 2000 is still dealing with a couple of red arrows down below with the MACD and the stochastic. So again, we'll need to turn that ship around a little bit more seriously with the Russell 2000, since it never really had the momentum to begin with, unlike the rest of the indices in the United States. Let's go ahead and take a look now at our 1040 crossover. Not going to spend a lot of time here because remember, this chart doesn't really change all that much. This is a 3-year chart that we're looking at in this case with weekly candles. The main thing that I just want to point out here is that we do have bullish crossovers across the board. That has not changed. The most recent change that we've seen was with the Russell 2000, where we did get the bullish crossover just a couple of weeks ago, and that has continued to be maintained up until this point. So right now, from a longer term perspective, trends remain fairly robust for those of you that are bullish out there. All right, let's go ahead and now take a look at some 12 grid analysis, starting with our intermarket 12 grid. And remember, when we look at these charts, the background color will tell you whether the market forecast is giving you a bullish or a bearish indication or posture on each of these securities. And what we're using with that market forecast indicator is the green line. Some of you might refer to it as the intermediate line. And so you can kind of see those labels up at the top of all these charts that say intermediate. So you can kind of get a sense, even though you can't see it here because there's just not enough room to share the indicators along with the price action when we're looking at 12 charts like we are here. But also keep in the back of your mind that if you were to right click on one of these 12 grids and go to maximize sell, that those market forecast indicators do show up down below if you're maximizing it. So it's only when they're kind of grouped together in the 12 grid style here like this that you can't see it. So that's why we also put the label up at the top of each one of these 12 charts to help you understand, why the chart color is either pink or green, and that's based upon the philosophy of the intermediate posture using that market forecast. And of course, if the intermediate line is going up between 20 and 80, we consider that to be bullish. As long as it's above 80 at all, whether it's rising or falling, anything above 80 is considered bullish. And then anything that is below 20 would be considered bearish. And when you see the intermediate line falling between 80 and 20 to the downside, that would be considered bearish as well. So those are kind of the parameters of how you'd use that intermediate line to set your own posture for these various charts that we might look at. Now, a couple things to report here today regarding the intermarket analysis. First of all, one of the stories of the year has been crude oil. I mean, that thing is it just seems like it won't quit. I mean, it's quite remarkable. It is kind of unhinged itself from the rest of the commodity world, and it's just marching to its own beat right now. That's crude oil in the lower right-hand corner there, and as you can see, it's now up 26% over the last 3 months. It was up another 1% today. So crude oil continues to be one of the most impressive trends of this market. The US dollar actually hit multi-month highs here today. Didn't have the most robust close to the day. You can see that was kind of an ugly looking candle. If I were to right click on that and maximize it, you can see what that candle looks like. We did close near the lows of the session there, it appears. So, that's not necessarily the most bullish thing. You'd love to see those candles that, close near the highs of the session like there and like there and like there, etc. So it wasn't perfect, but nonetheless, it does continue that trend of higher highs and higher lows. And of course, the US dollar does tend to impact other things like commodities, at least if you're a commodity that's not crude oil, apparently, in this current marketplace, because you will see that the gold market was down today. You also found that agriculture commodities were down today. In fact, an important session for agriculture commodities, as we did close at a low price that was lower than that previous intermediate bounce there on March 29th. So again, a little bit of hiccup there. Probably not the best place to be for your money to the upside. On the other hand, check out those junk bonds. been mentioning that in the last month or so. As we continue to see crude oil prices go up, junk bonds are performing in kind and continue to meander higher as well. So junk bonds appear to be one of the stronger trends amongst the fixed income securities out there. Let's take a look now at our next set of 12 grids. This will be chart 4F for those of you that are following along at home. This is our foreign stock markets out there. And as you can see, we only have two pink charts on the board. We have India up here and we have Israel down here. Now, Israel, I spent some time on, in a presentation last week talking about, and I still find it interesting. You'll notice that despite the pink background of the chart, the price action to me looks fairly robust. Let me right click on Israel, which is EIS, and go to maximize sell here. And you'll notice that as we look at this chart over the last 3 months, there is a very consistent series of higher highs and higher lows. And this thing did bounce a couple of sessions ago right down there near that rising 30-day moving average and has done a very good job lunging back higher. So at this point, despite the fact that the green line has fallen out of the upper reversal zone, and that's why it has, the market forecast would consider this to be bearish at this time, I don't know if I would let that posture completely influence the trading idea, because price action, at least to my eye, appears to be fairly strong right now in Israel. So I do want to keep my eye on that one, but I think that one's kind of an interesting bounce setup. It might not be a breakout candidate that some of you are looking for when it comes to those strong bullish intermediate postures, but perhaps for those of you that are more swing trading oriented, there may be something to like there with that particular bounce out of Israel securities. Other charts that are doing quite well, include Russia, and we talked about the Russia stock market and its influence from crude oil prices, and of course that is kind of a tie that binds those two units together. And so we have oil, going a little bit higher now. We have Russian stocks going a little bit higher as well. And so as long as oil holds up its end of the bargain, I would assume that Russia will continue to do reasonably well there as well. And then we also have Germany having a pretty nice looking chart here recently with a trend of higher highs and higher lows. Japan had a pretty nice session. Notice that Japan was up 0.56% here today, and it appears that we were really close. We might have actually pulled it off. Looks like we might be at a 3-month closing high on Japan. Not an intraday high. We were a little bit higher on that candle and that candle on an intraday basis, but on a closing price basis, it does appear that EWJ is at a closing 3-month high right now, and so that could be in the works for a bit of a breakout above that more congested area that we're dealing with here over the last several weeks for Japanese securities. Let's now take a look at our final 12 grid, which will be the U.S. sectors 12 grid. And as we look at this, you can see that we mostly have bullishness across the board here in the United States, with the exception of some of those more defensive areas of the market. So, of course, healthcare has been the big story here in recent weeks, as it has really swooned while the rest of the market has held up quite well. Healthcare actually had a pretty good day today. It might end up becoming a dead cat bounce, but we were up 1.58% in healthcare. Remember, healthcare had a rare oversold cluster signal here just 2 sessions ago, and that was the first one on the board. In fact, out of all 12 of these charts, that was the only oversold cluster signal that we've had on any one of these sector ETFs in the last 3 months, at least from a daily candle perspective. So we are getting a reversion to the mean off of that oversold cluster signal. However, I would be, a little bit more hesitant and cautious if we continue to track higher on healthcare up to that downward trending 30-day moving average. I'd probably be looking at some bearish candidates up at those levels right there now that we have a significant break in support in healthcare. A lot of the other charts are holding up quite a bit better, however, and you can see that I mentioned before, communications really had a nice breakout today. We also had a nice breakout in technology. that makes sense since the NASDAQ was doing so well today. But just to confirm, technology specifically is hitting new multi-month highs here. Discretionary hitting new multi-month highs. Industrials hitting new multi-month highs. And energy had an attempt at a multi-month high, but it actually closed a little bit lower on the session after hitting an intraday 3-month high earlier in the session. But for the most part, you look at these charts and you kind of stand back and squint and you look at all 12 of them and you say, things are rolling pretty nicely for the bulls right now. And we'll see if that can continue throughout earnings season. Real quick, over on the web, appreciate all of you that click like and retweet on our videos. And of course, we try to make it as easy as possible for you to do that by not only embedding the links on our website to Twitter and to Facebook to make it easy for you. But remember, we also provide the link within the email that we send you. So you can just click on the Twitter link there to go and click like. And David and I will also traditionally pin our most recent market outlook video to the top of our Twitter timeline. So if you just go look for us on Twitter and go to the top of our Twitter feed, you can find our market outlook video there as well. If you get value out of these free videos, we would encourage you to do that. That is your way to let us know that you want us to continue to do these videos going forward. Also, I did have my my dividend growth investing class today. We talked about the healthcare sector. So for those of you that are a little bit thirsty for knowledge in terms of what sorts of values could have been uncovered from this swoon in healthcare stocks recently, feel free to check that out. That recording is now posted on our calendar, and David had an excellent directional option strategies class earlier today for those of you that are premium members of Market Scholars as well. Tomorrow we continue with our classes. David has his options inventory trading class at 11 a.m. Eastern time, and then my Strategy Lab swing trading class will be at 2 p.m. Eastern time. All right, let's take a quick look at the sector selector. Remember, I produce this every Friday traditionally. This last Friday, of course, was Good Friday, so the statistics are really as of the Thursday before, as opposed to the traditional Friday, but nonetheless, gives you a sense of what's been happening with sector rotation here recently. Technology remained the king up at the top, as it had been for much of the last 2 months, but we do have a couple of new things to report. Industrial surged all the way to the number 2 slot, and then discretionary has been going on quite the tear here recently. Notice that discretionary in the orange was second to worst on the rankings as recently as March 15th and has gone all the way up to the 3rd slot here most recently. So those 3 areas, technology, industrials, discretionary, are all known as more of a risk-on type of sectors out there where market participants are willing to kind of look at more cyclical areas of the economy to place their bets, as it were. And so we like to see that type of behavior. Markets are pretty firm at this particular juncture. All right, let's go ahead and now talk about our trade application example for the day. And like I mentioned in the intro, I actually wanted to focus on a bearish trade. And as you can imagine, the vast majority of trades that we have in our portfolios are bullish. And, there may be a time or two to add a bearish trade here and there to just kind of offset some of that bullishness. Of course, we're applauding the fact that we're hitting all-time closing highs in the stock market today. That is benefiting the vast majority of our portfolio. But it doesn't hurt to have a bearish trade here and there to kind of offset things in case we do have a little bit of stumbling blocks along the way in the market after it wants to take a little bit of a breather from going up so much. So the stock that I wanted to focus on today is Nielsen. Nielsen Holdings PLC. It's a company that some of you might be familiar with the Nielsen ratings and different things like that from television. But as you can see, Nielsen kind of bucked the broader market trend today. It was down 1.8% today on a day when most markets were hitting new multi-month highs at a minimum, in some cases new all-time highs. You can see what that candle looks like here today as we not only fell today, but we fell further away from that kind of falling moving average right there as well. Starting tomorrow, that moving average will likely be colored red as it starts tracking that information right there. Now you'll notice that the background color of the chart is pink, and it has been for the last week or so because that green line on the market forecast has already been drifting over. So that confirms that we have a bearish posture on this particular security. You will notice that it had this huge gap down maybe about a month or so ago, and then rallied furiously to kind of fill that gap, but it did not have what it took to take out the prior high. So it was an impressive rally after getting punched in the gut, but it wasn't able to kind of fulfill upon that possibility of going back into a significant uptrend. It would have needed to get past its prior multi-month high in order to do that. And now you can see after having that really strong move off the bottom, it is starting to roll over yet again here. So what I thought we would do in this particular case is look at selling a bear call spread on it. Now notice this is one of those stocks that's a little bit off cycle in terms of earnings announcements. The last time that they reported earnings was February 28th. So if you tack on 3 months to that, the assumption would be that this one might have earnings, on May 28th or thereabouts. And so the point of me bringing that up is that the next time they report earnings should be after the May contracts expire. So for those of you that are looking for trade setups, but you don't want to trade through an earnings announcement, that can be very difficult right now when we have so many stocks reporting earnings in the next several weeks. This is one of those rare ones that's kind of off cycle. So we'll see what we can kind of come up with here on the May contracts by coming over here to the trade tab and then looking out in the call section. I want to sell a call spread that's a bearish trade, and I'm going to be looking for, maybe the 27 right here will get us done. Notice the 27 is a 35 delta. If we would go to the 28, we'd have to do a 23 delta where we probably wouldn't be able to get filled. Usually we try to attack about the 30 delta. So 35 is not perfect either, but it'll get us kind of in the vicinity of where we want to be. Notice that the 35 delta, which again is the 27 strike, with the May monthly contracts, it's one of the largest open interests out of all of them as well. 21,000 contracts at that particular strike. So we won't be alone in looking at that particular level. So let me go ahead and right click on either the bid or the ask, go to sell vertical, and I could do a $1 wide and get 30 cents. But in this case, I'm gonna go all the way out to a 29. So do a $2 wide where we're selling the 27, we're buying the 29. That is a credit of 55 cents. Remember, we traditionally are trying to get a 30% return on risk when we're doing these credit spreads. So if you want to check that, you can click on confirm and send. And then in the max profit, in this case, it says $55. We can take that and divide it by 145. And so on the calculator here, 55 divided by 145 tells us that our return on risk is about 38% in this particular case. Now, one of the reasons that I thought this was kind of interesting is that if you look at the break even on this trade, as long as it stays below 27.55, this trade should make money. And so 27.55 on the chart basically brings us right back up there to that multi-month high. Notice that it says 27.57 there. So in other words, if you assume that this stock will stay below those multi-month highs here for the next, 24 days, then this could be a trade, a rare bearish trade that could make some sense in this marketplace. So let me go ahead and click confirm and send, review it one last time, and we'll see if that gets filled first thing in the morning. All right, well, thank you for joining me yet again here tonight. Markets continue to be robust to the upside. New highs on the S&P 500 and on the NASDAQ. Most of the risk-on types of sectors out there, including technology and industrials and discretionary, definitely holding up their end of the bargain, whereas some of the more defensive sectors are holding back a little bit. So all in all, a very bullish time to be involved in the markets here. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.